Good morning everyone, and thank you for joining us on the second morning markets of 2022. A mixed day yesterday for equity markets and asset markets in general, the first trading day for UK assets post the New Year holiday. We certainly saw the UK equity market benefit from that reopening theme and seeing some sectors such as travel, airlines, the financials and commodities being very strong in the day, and you can see that just in the ticker below with the UK one of the strongest markets on the course of the day. I think the other side of that, I think if we look at the US, a bit of a different performance there last night where we saw real divergence coming through between the more growth-oriented names that did very well in the end of 2021 but slightly weaker yesterday. A lot of that is coming through from the quite a material move that we saw in US bond markets yesterday and on Monday indeed when most of the move occurred. If we just look at the US 10-year, we've seen yields there move out to 164, just where they ended the year at 151. So quite a material move in the 10-year in the US, and that's impacting other sovereign bonds around the globe as well. And we're seeing that impacting some equity markets, those more growth-orientated areas of equity markets. The other thing that's maybe influencing that move out in treasury yields is quite a lot of issuance for the first 2 days of the year, where we've seen investment grade corporates wanting to raise money, take advantage of the relatively low interest rates that we have at the moment. Remember, as we've discussed last year, expectation that interest rates will be increasing through 2022. So corporates taking advantage of that. We've seen some $30 billion worth of investment grade corporate bonds issued in the first 2 days. And indeed that needs to be funded. Where does that funding typically come from? From the sale of treasuries. So it's not surprising to see the treasury market weaken in the US in particular in the face of that issuance. I think the other thing to note from yesterday was just looking at the ISM manufacturing index in the US. A couple of encouraging points within that. Yes, the overall index did decline from the level that we saw in November, but digging into it a little bit more, it was really interesting to note just the inflation element of that, the prices paid component, seeing that really coming down, falling from 82.4 in November back to 68.2 in December. Maybe that gives us an indication that some of those inflationary pressures that we've been discussing over recent months may have peaked, may be starting to decline, and that should feed in as we go through 2022. Similarly, within the data, also the deliveries time was coming down as well, another positive given the challenges that we've seen in global supply chains over the past number of months. I'll leave it there for today, but please do join us again tomorrow. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.